Hey y'all, welcome to episode 3 of the short and long of it. I'm Scotty, and today we're going to be going over our NVIDIA and Google positions that we entered in this past month. And we're also going to go over the market in general with that big red candle that the SPY produced this past Friday. How are we feeling, as well as what stocks might be on sale? What new stock do I have my eye on based off the good fundamentals as well as price action? Stay tuned for more. Alright, so checking in on our NVIDIA contract, we have about 5 days left on it. Let's see where we're at with that. That big pullback on Friday. So 115 strike price, honestly we're still sitting pretty. It's worth about 91 cents now. I think last week is probably 60 cents. I think I saw this thing drop all the way to 40 cents on Thursday, but it's back to $1, worth about $1. But data decay is really going to take over on this contract this week, barring anything crazy. I believe NVIDIA reports earnings on the 26th, so on Wednesday, so might see a little volatility with that, and probably explains the price of the contract itself. There was no earnings, volatility is probably a little lower, and it's probably sitting around that 40 cent or $40 a contract, but we're still sitting nice at 115 as the price itself is at 134, so essentially a good $20 out of the money that we're at. So we're sitting good with that. We'll probably just let this run to expiration. I was hoping that we could buy this back for about $5 or $10 a contract and restart, but market had other ideas on Friday. We'll dive into Google now. As you guys remember, 14 March is the contract that we're covering here. I have one in a different account for 7 March expiration, but it's at the exact same strike price at the 175. 14 March, this put contract is actually worth $2 now, over $2, $2.25 or $225. So I got it for 141. That big market pullback increased the price of this contract to 225. So it being only $6 out of the money, that's why it's more expensive. However, we're not losing money, right? I gained the 141 premium right away, and that's mine to keep. This contract can fluctuate, and if you enter in these contracts, you can see that the price will go up or go down, and it'll tell you, your overall gain. Your overall gain has already been realized, right? You receive that money right away, so they'll say my overall gains may be negative, but that's just the percentage in which the contract's going for or against you, right? It doesn't really matter. If you wanted to sell the 175 on Monday, you can actually get a better premium and way less contract time. For me, I sell contracts out 28, 35 days. 30 days is usually a good time as well to sell those contracts at. So 19 days wouldn't recommend it, but 175 is a good strike price that we identified last week in Google. We'll let this thing ride. We get a sign, but this was just a reaction to the overall market um, pulling back on Friday. Speaking of the market, that's why you see this huge red candle in Google, which is a sympathy move with the rest of the market. That 177.81 is actually the 200-day moving average here, this red line, which is nice. It was 175, and that's essentially why we chose the strike price to begin with. The pullback, but we get a sign, we get a sign. I think Google's a great company fundamentally from a financial perspective. If I get a sign, amazing. Let's take a look at the SPY real quick. See what we're looking at. So a huge red candle on Friday all the way down to the 50 moving average. This might actually hold up the market itself, but there could be more pain for long-term investors here in the near term. But well, only time can tell. So with that, I started thinking throughout the day on Friday, like this is great for us as investors, right? What stocks might be on sale? What stocks should we start looking into to find a good startup position, right? A lot of these good fundamental companies are going to go on sale, so let's do our due diligence, right, and sort of dive into the fundamentals of each company that we might be interested in. And like I said in previous videos, if you're doing cash secure puts, it's always great to do these cash secure puts on red days. You receive way more premium because the market's reacting in downward fashion, right? Coming up, I'm actually going to be talking about AMD. AMD was kind of off my radar as I'm more invested in NVIDIA, but I own AMD in 2022, going into 2023, but ended up selling all my positions in AMD around $200 a share, just because their annual earnings that came out for 2023 was just not good in my opinion. So I wanted to have to take a wait and see approach. And with this red candle on SPY, it kind of reminded me to, hey, let's go take a look at AMD and see what they have to offer. All right, so as y'all know, I like to utilize Yahoo Finance to analyze any given company's earnings reports and balance sheets. So I take these numbers and then aggregate them to my own Excel spreadsheet where I have a couple of formulas written in the background to sort of capture all these different numbers and put them in a good perspective and what I actually care about. So looking at AMD here, you can kind of see why I sold my positions here beginning of 2024 is really around the same time frame of February of 2024. I just let go of all of my positions in AMD as they had a negative percent rate growth from 2022 to 2023. Their growth in cash from operating activities just significantly down from the previous year, and then even from 2021. It's just you're not getting cash from your operating activities. Your net income, your net profit margin is down from the previous year, and your rate of growth is down. So it's just huge red flags for me, and I decided I wanted to move on from that position and take sort of a wait and see approach. So earnings came out, annual earnings dropped for AMD about a few weeks ago. For 2024, their revenue is up 14% from last year, 14% rate of growth. That's amazing. Huge turnaround. Their net income, so not only do they bring in more money, but they're actually keeping more money. They're actually keeping 6% of their revenue this year as opposed to the 4% from last year. So that's already great news for me. Their cash position is about flat, so that's fine. Their cash from operating activities increased substantially, up 82% from last year. So that's great. They're still investing in research and development. They're still paying off loans. So this is good news for me. And now AMD is back on my radar here to look into buying long. So we'll take a look at the charts here coming up and see where it might be a good place to enter in a cash secure put. So look at AMD here. This is a 1-year chart. As you can see, it really spiked around the 210, 227 mark, and then it's just really sold off ever since then. I was lucky enough to sell all my positions around the 200 area last year, and it turned out to be a pretty good decision. But as you can see, it's all the way down here to 110 now. And after the earnings reports, I'm really looking at buying AMD. I think it's definitely on sale, and I think they're actually turning it around now. Just from a financial perspective, I mean, what other real competitor does NVIDIA have other than AMD? We'll zoom in here a little bit. Let's go to the 6-month data. It's still beating down. The 200-day moving average is way up here at 145. Underneath the 50 and the 20-day moving average, the Bollinger Band, it's just kind of steadily decreased. So where is this stock going to? Got a nice line of support here at 106. However, I'm looking at the flat 100 area. A good round number is usually a psychological number for most investors. I want to buy XYZ stock. Or I guess I can't say XYZ because that's what Block's stock ticker is, but you guys get the point. You can buy whatever stock at 100, it's a good round number, or I want to sell this at 200, it's a good round number, right? So I want to look at around the 100 area for AMD. I think that's an amazing price point given its earnings. I think it's ready to sort of take off, even with a huge candle on Friday. I mean, it dropping from 113 to 110 is pretty insignificant, only about a 3% drop, so not crazy. I typically will use TradingView to see other levels, so let me take you guys to TradingView. This is just another charting software that I use. It's a little bit more user-friendly than Thinkorswim. So here we are at TradingView. It's just another charting software that I use for marking out good lines of support when the 200-day and the 50-day and 20-day is not really a thing anymore. As you can see over here, red for everyone, right? But why I'm looking at 100 or 101 here, way back in October 2023, that's when AMD really kind of took off to its 200 price point, and I like this area. It's a good valley, if you will. If you can kind of visualize a valley here that hasn't been tested since the run up. And when stocks are sort of in free fall, like this AMD here, it's going to continue to look for these valleys, these 2 candle areas of support. I'll say like this is the daily time frame that it wants to go back and test, and maybe that will hold it up. Given its good financials and everything like that, at the present day here, I think that 101 is a really greedy price to enter in on AMD. I'm still tempted to to enter in the 105, 106 range, maybe dollar cost average down to the 101. I'm feeling pretty confident about AMD at this 101 level, given its financials and fundamentals. So I'll be watching that this week, and if it's in that 101, I'm going to start dollar cost averaging in the AMD, start a new position, really look to the long term, see if it can start recovering its levels from late 2024 into 2023, right? So we have a few untested levels here that I think would maybe be good selling points if we really want to run it up, or if we want to hold it for a long term. Sure, why not? Take it all the way back to 206 if you really want to. But selling cash secure puts on this thing, if I'm wrong, I'm wrong, But given its annual earnings from this past year that were just dropped, I think the stock is ready to recover. I think it's finally showing signs of growth, right? In revenue and net income, and just the bottom line. So I'm ready to enter in a long position here. All right, I almost forgot, but I want to add in a new position that I entered in this past week. It was on Wednesday. I entered into an Amazon lease contract expiring next year, 2026. I want to just walk through my rationale real quick on why I wanted to enter in that contract, as well as what price point I'm looking at selling this contract, what percentage-wise is it, 20%, 50% return, 100% return. Go into the financials of Amazon really quickly. Go into Amazon's technicals really quickly. Sort of explain why I think it's a good time to enter in a lease contract with Amazon, as well as I'll dive into their financials, give a little brief overview on why I think Amazon is a financially good company. I don't think many of y'all need convincing in that, but it's always nice to run the numbers anytime you're entering in a long position or a short position or any sort of long-term position in the stock market. You gotta have that rationale before we enter in any sort of contract with any given company or ETF. So looking here at Amazon, they reported earnings back here early February and had a steep drop off, and this last candle here is a sympathy move with the rest of the market. I actually entered in this contract around the 223, 224 range. It's obviously red right now, but that's totally fine, as I definitely believe in the fundamentals of Amazon. They have a good balance sheet. So we'll look at what that looks like in regards to the option chain. So all the way here in March 2026 is where this contract expires at. If you've seen my Leaps videos, you'll understand why I chose the price point that I did. I chose the 185 strike price. At the time, it was a 0.80 delta because the stock has retreated from the 223 area that I originally bought this contract. It's at 0.78, so that's the importance of buying deep in the money. You still have all this intrinsic value to hold on to. It's worth around $5,000 even, depending on where your fill is at. Actually, got a fill around the 5,500 area, the 0.80 area for this 185 strike. So I'm down about $500. But the benefit of this leaps is it's a year out contract, right? So you can account for these pullbacks in the market. They're going to come. But looking at Amazon as a whole, their technicals, everything's a little oversold here. Look at this RSI all the way down here to 34. So it's definitely in that oversold territory. I'll be looking to ride it all the way back up. Probably in this range, the 244 to 250 range. I'll look to get out potentially, sort of adjusting my profit target as the contract matures. $5,000, $5,500. I'm not too worried about having tied up. Whereas if I was running a SPY leap, where it's around $11,000 or $12,000, probably look at 20 to 50%. But I think looking at Amazon here, it riding all the way back to 245, 250, maybe 280 in the future. Let's go ahead and keep that. We'll have the wait and see approach, but given the capital that I had to give up to afford this contract, I'm not too worried about holding this to about 90 days of expiration. So initial check in the box will be the 245, 250 range, and then we'll just ride it from there. We'll monitor the quarterly earnings reports that drop for Amazon and kind of go from there. So speaking of earning reports, we'll dive into Amazon's financials really quickly, kind of give you fundamentally why I think it's a good decision. As you guys know, I use Yahoo Finance to pull all these numbers from for these annual earnings reports. We have Amazon here, and really since 2022, has been green for me. Their rate of growth, it's about it's about even regards to last year, so I'm not too worried about that. Their net profit margin and their cash position here has increased, so that's excellent, right? So like their revenue only went up 11%, which is, for Amazon, is still a ton of money, but they're also keeping more money here. So somehow they were able to cut costs and save money even in these high interest rates. That's a huge green flag for me, as well as their cash position. So the cash position has increased substantially from last year. So any sort of headwinds that we have this year, 2025, Amazon is going to be able to sustain through here. Still investing almost double what from last year, and then financing wise, they're still paying off loans here, so I'm not worried about them taking on any sort of new debt here. The growth in cash from operating activities is still up, but it's 36% from last year. I mean, it's a huge jump from 2022, as their rate of growth was actually negative then. So you can see it kind of stabilize here, but I'm not too worried about that. It's more of the how much money they're keeping. They cut costs somewhere along the way here, and then now their cash position is even higher than last year. So Amazon's got the green light for me for this Leaps option. This will be our first Leaps contract for this account. So Amazon, so expires in 2026. So we'll periodically check in on this. We'll probably do it once a month, as opposed to the cash secure put positions. We'll check in those weekly. I want to throw this Amazon trade in really fast, give you my breakdown on why I think it's a good buy long term. And yeah, we'll just let it ride from here, and we'll adjust our profit target as the market plays out. All right, everyone, so that will do it for this week's episode 3, the short and long of it. Checked in on NVIDIA, we checked in on our Google positions, we looked at the overall market. A red day on the SPY this past Friday, but we know where the SPY is going. It's going up and to the right. So it's a good time to capitalize on stocks that are on sale. Maybe look into AMD. If you have a little cash on the side, maybe get a little exposure to them coming up here in the next week or two. Like always, hit that like and subscribe on this video as you follow on this journey of mine to become financially free. If you have any comments or questions, please throw them down in the comments section, and I'll do my very best to answer y'all as we go along, and I'll be able to provide any sort of clarification on what I was talking about with AMD or Google, NVIDIA, or cash secure puts. I'm also dropping the will strategy, the cash secure puts and cover call strategy that I use primarily to enter in positions for my portfolio, as well as Leaps options. So AMD might be a good candidate for a Leaps option. If you have any questions about those strategies, feel free to check out those videos as well on my channel. As always, stay safe in the markets. Y'all take care.